Eric Bible with the Bible team at Neil Home Loans. Relatively quiet week for mortgage interest rates. And given the recent string of news, hey, any quiet will all bask in. So, with that, as of this morning, despite the markets being closed in observation of Good Friday, 30-year fix has dropped to 6.91 from last week, 6.96. And again, any decline down is a welcome relief. So this morning, I really want to discuss and touch on in the mind of the Fed, but most importantly, facing and dealing with adversity. So as we know, the Fed's mandate has been over this last hiking cycle, or through this current hiking cycle, I should say, is price stability, control of inflation, and maximum employment. And as we've seen up until really the last two Fed meetings, the tone from the Federal Reserve, specifically Jerome Powell, has been, hey, we're not talking about rate cuts. Inflation's too high, employment's strong. So the idea of changing course is not in the equation. However, as we entered really the close of 23 and then start of the new year, that tone has drastically shifted. Where yes, prices are still high. So around the mandate, around price stability, there is definitely still work to be done. But as we've seen really over the last 9 months, inflation is coming down from a year over year comparison. And again, yes, we are still paying higher prices. But here the Fed is in a bit of a tough spot in that their ability to control that segment with higher interest rates is proving to be a challenge. And simultaneously, we have some challenges that are starting to spark in the employment sector. So, again, contradicting that dual mandate, price stability, maximum employment, unemployment has risen to 3.9. So, here, landing this plane, it's going to be very, very challenging for the Fed to justify raising rates and, more importantly, keeping rates at the levels they are. So here, really starting the new year and looking back at the last three press conferences that Jerome Powell has held, his tone around what happens next is really starting to change. And ultimately, the bond market is starting, stock market, equity markets are starting to call that bluff. Up until really the last meeting, the discussion and timing around rate cuts was elusive. Yet in this last meeting, it was very clear that 3 cuts are still in the cards for 2024. And it appears that they're noticing too that where, yes, the labor market is still strong, the fact that we had a move from the 3.7% unemployment to 3.9 inside a month tells and paints a very different picture. So inside the head of the Fed, it does look like their job is going to get tougher. But for us, the good news there is that rate cuts will bring lower mortgage rates, continue to spur demand in housing, and all those good components that come around a Fed pivot. Again, no one knows the timing except for the Fed, but it does undoubtedly appear that we're getting closer to that end than we were in months past. That said, really the piece that I want to hone in on this week is around facing adversity. And again, we know that the NAR settlement is created a ton of chatter within our consumer base, within our industry, you name it, we're seeing and hearing about it. And the component there that I want to continue to drive home here is it's business as usual for now. There's still a lot to be determined around the NAR settlement. Judge still has to sign off on it, and those changes have to go into effect in July. So yes, there is this component around, hey, it's business as usual. But the thing that we need to be very, very aware of is the consumer has been presented with all this information and they're starting to create their own narrative. And the individuals that are deciding, hey, we're not going to bring it up, the agents specifically, we're just going to hope for the best, is ultimately are those individuals that are going to get left behind. Our consumers are having this internal dialogue amongst friends, families, coworkers, you name it. The ones that are tackling it head on are going to be the ones that ultimately rise above the noise. As I shared last week, Neo has put together a phenomenal resource guide. A lot of people reached out asking for a copy of this and are seeing success within it. If you would like a copy, message me. I will get you that copy. Something that we can proactively communicate to our client base so they can understand what is happening and what changes we can expect to see going forward. And again, to that point, there is still a lot of questions and answers that we still need. But in the end of the day, our consumer is having that dialogue. So being in a position to communicate it proactively will set you above the rest. Today, we expect to be it will be a very quiet day in the markets, given the fact that it is Good Friday and both stocks and bonds are closed today. So here we can bask in these wins going into the Easter weekend. Next week, it picks back up as Friday we receive March's unemployment information through the Bureau of Labor and Statistics jobs report, and we'll report on that as it comes in. As always, make it a fantastic Friday and an even greater weekend. Thanks again.